All right, hello everyone. So let's do another case study. This is a case study on gold. Today is the 3rd of March. And these are the trading hours from Monday. This is Monday. Okay, from Monday, and this is Tuesday. All right. Now, yesterday I said, in fact, for Monday, let me do this. I'm just going to make this nice and tight for you. This is Monday. So these are the trading hours, which I posted last month, okay, at the end of February, okay. And I said Monday, be mindful at the opening. Obviously, when I posted this, I didn't know they were going to start a war on the weekend, right? But knowing that you need to be mindful at the opening and having these hours and push to the US opening and expecting sudden moves and all that kind of jazz is good to know in advance, right? So just like Monday, we've got trading hours for Tuesday as well. Okay, and this is how you want to use the hours and the time and the price together, right? So yesterday I said, should the market dip down into a trading hour, we're good to buy. Okay, now remember your trading days as well. Okay, I'll just, for the benefit of this exercise, note it. This week's trading day is Wednesday for gold. Okay, so, and the energy vectors that I've calculated was green Monday, so buying the low on Monday was a good thing, and that's why the market opened up as well. And then I'm expecting the market to have a flow week until Friday. A flow can mean we're either going to go sideways or we're just going to follow the trend. Okay, it's just going to flow through, which is fine. Okay, so coming back down again to the same price zone at a trading hour is obviously a place of entry with a tight stop loss. Okay, so now what do I have? Now I have hours. This is, by the way, a 15-minute chart. Okay, so now I've got the hours ahead of me, which I'm going to use to also manage the trade. Okay, so I'm not just entering a trade and letting it go and see what happens. I want to make sure I manage the trade at the right hours of the day, and these have already vertical lines I've drawn. Okay, so the market coming down here, showing a good rejection. It's a trade hour, and we can do this with a tight stop loss. In fact, if the upcoming hours were not so, I'm expecting some sudden moves in the next trading hours, okay, then, in fact, I did say this should be from 1 to 3, which is going to be 2 on the platform. So this zone is going to be a little tricky. So two things can happen. We're either going to go there, we're going to muck around, do a boom, and then do a boom. So those are the options that I've got here in front of me. Okay, so now that I know that the market closed the gaps, which is what I anticipated yesterday, it happened at the trading hour yesterday. So anybody bought here, once it was done, then that's it. You should have been already in the money in New York and in Asia. All right, and in Asia, did we have hours for today? 7:30 on the platform. This is your 7:30, guys. Exactly there, and the market bang, pushing into the next trading hour, going back to retest that. Okay, so this is a good case study because we have a direction, the market coming down into the same zone as yesterday, where we had a trade hour and a price that matched, okay, and then went upwards, and we've got a similar scenario here. And now we also know what can happen in the future. This time period is going to be tricky, so we're going to be on top of our game, and the stop loss isn't too far out. Once I cover that, I've got a bigger target with the second trade all the way up there, because all right, so let's get back into it. So this is gold. Okay, so trading hours here, like I said, the stop doesn't have to be far, and I am planning on taking it to 5,600 if it goes in our favor. And like I said, the vectors, the energy vectors that I've started to calculate, I'm going to incorporate them more and more as we trade. But you know, knowing when you're going to get in and following through at the right time and price, it just really makes your life easier. It really reduces your risk. And if you do get stopped out, the losses are minimal. Like I got stopped out last week in that sideways zone. I think it was somewhere last week, Tuesday or whatever. Okay, and you know, if you know the hours, for example, look, last week, Tuesday, right? So yeah, for example, you see, you know the hours. And because if things go pear-shaped at that hour, so if like I was buying here, let's say, okay, at the trading hour, your stop loss is going to be there. It still kind of gives you enough to, you know, cover the trade a little bit at least. But, you know, once you understand the trading hours, then you know things can go both ways. You know, from here, we're either going to go into there, we're going to come into there. And if this breaks, we're going to break. Okay, so understanding, you know, also the targets, remember from last week on the case study, check last week's case study as well. Remember I said that's the cause and that's your target. So if you also learn cause and consequence, it really helps to kind of like, you know, get your pricing into a good, you know, like very accurate. If your pricing is accurate, then you just look at the time. Your time is good. Just go in. You don't have to think too much about it. The only thing you need to obviously think about is your risk return. So if this is the low and I've got my stop loss just under that low, I want to cover the trade, and that is a 1-to-1, okay? And that here, okay, is, as you can see, 1-to-3, 1-to-5.5. Okay, all the way there, because that's $500, that's $500, and that's 1-to-5.5, let's say. All right, so if that's the kind of like targeting you're doing, and if you're measuring to time and price, then that's great. If the market pushes in our direction, you see this is the first resistance I'm going to have. So if we break above that as well, then I'm going to follow it to the next hour. Obviously, because we've got trading day Wednesday this week, right? So this can either, like, you know, flow into Wednesday, which is the anticipation that I've got. And because when I'm looking at the direction vectors, I'm thinking, okay, this vector that we have this week is a stable vector, which means, you know, we've done the up kind of a motion, and that mid zone, now we're not too energetic to the downside, we're not too energetic to the upside, but we're in a flow zone. That flow zone is either going to be sideways, or it's going to flow. It's going to follow the trend, okay? And if that's the case, we'll flow. If it's going to be sideways, according to that vector calculation, then I should be mucking around here until, you know, the market breaks out one way or another, okay? And what day could that be? Well, according to the trading days, like I said, Wednesday. So I also know which day to look out for. So if I'm following the market from a certain price at a certain time, then I can say, well, you know, trading day is tomorrow. So if I was to follow this up move trend to the upside, buying the pullback closure to go up into Wednesday is logical. So which means I can, if the trade works in my direction, keep the position open overnight. Okay, especially if I've covered the trade, that's all good. All right, so I hope that helps. Nice little case study on gold. how you can use time and price together. Any questions, queries, drop me a line. I'm happy to answer your questions.